In order for people to realize and get started with a cleanup budget, they normally need to get hit in some way. And getting hit could be a fraud, it could be an error, a large one, but either one, it tends to get people thinking and saying, what is that cost to our organization of letting this happen? Why don't we, go out, try to get some consulting firms in, or even take it upon it ourselves to do a bit of a process improvement, and let's think about it from a people, process, and technology point of view. But what you usually find is when a large error happens or fraud happens, that budgets just appear, and you're able to start making some improvements within the organization. I liken it to creating this perpetual cash register where every time you open it up, you get some cash and you use that some of that in order to improve the operation of the company. And at some point, the improvements are done, and you can only do so much. Yet the savings that you will get from that improved process at that point, as well as the tools that you build that will continue to kind of find and monitor the activity, are well worth it, but also were paid for by the free cash that came out of cost recovery. So if you start with a cost recovery project first, find some cash, and then apply a portion of that to technology or process improvements, you create this perpetual machine that just keeps saving for you more than you're spending on it. So when you look at the technology components that you should include, it all goes back to this good vendor management. And while there's many more components we could add that get into contract pricing analysis, etc., that is more at the vendor audit level, this type of analysis is the starting point. It's the piece where we're going to look for vendor duplication, we're going to look for vendor duplicate payments, we're going to identify vendors that we could maybe inactivate or just get off of our system, and or are just incomplete, and we should get more info, because when we get more info, we may find that there is an issue. And that's where, by relating to external databases, we can gain more information on that vendor. Taking a look and doing a bit of a terms analysis will help us figure out the payment terms with that company and if we can improve them. And last but not least, we can take a look for recovery. We can just see within that particular vendor type or that spend type, could we save money if we did things differently? So from a vendor duplication point of view, I like to look at it from many perspectives. Are there duplicates on address, on zip code, on name, tax identification number, phone number, supplier name with a different address, etc., etc. I think the goal here is to combine all of these approaches. And I would even add another approach to that, which is doing a bit of a fuzzy matching, where there are characters of difference between a vendor name, let's say, as an example, and that fuzzy matching can be very effective in finding duplicates that the duplicates that are perfect, like a phone number duplication, just isn't going to catch for you. Now, from a duplicate payment point of view, it's a very common recovery. We've been mentioning it over and over again. You may run so many reports. I run up to 15 different reports and then put them together, prioritizing which ones have the best duplicate payments for review. And that's where customizing these tools over time, again, using the cash that comes out of the cash register to continue to customize the tool has benefit, because over time you get to score on that benefit, and then the false positives just jump off the report, and you're left with very good duplicate payments to work with. So as we're looking at external data, we might want to take a look at the IRS program for TIN numbers and try to match hundreds of thousands, or in this case you could do 100,000 at a time, of TIN numbers up to the IRS database. And what you're going to do is it's going to check whether or not the TIN numbers is accurate, but also if it relates to that vendor name. Now, they don't tell you exactly how they do their matching. However, I find it is a bit of a fuzzy match, and I think it's a great program and very useful data point to determine whether or not the TIN number that someone gave you is accurate or not. Again, the IRS is not going to say that they're 100% accurate in how this is being calculated. However, I find it's very accurate and a very good test to determine whether or not that TIN number is appropriate. You might want to also match yourself against other database lists that are out there, such as the OFAC list, which is a list of all organizations that the U.S. government has isolated and said that we should not be working with, we should not be giving money to, etc. And that is this Department of Treasury OFAC list. You can download it right from that link there, and once downloaded, you can then align it to your data based on name, address, etc. Another place to match your TIN numbers against. And by the way, getting a TIN number from a vendor is a very useful tool. I mean, just being able to get that legal name, legal TIN number that that company is operating under can save you a lot of hassle in learning more about that vendor. And again, this being another benchmark, taking a look at death files and determining that someone use a person's individual social security number as their own. So in this death file, you can get this from ntis.gov. I believe they're up to about 87 million records, and it's all deaths that are started in 1936 with the Social Security Administration and forward. So while there are various tests to look for bad information, fraudulent vendors, fraudulent information, some other tests that you could do just focus on how quickly are we paying our vendors, and is there a way to either get a discount for vendors who are paying quickly, be it 1%, 2% discount for paying in 10 days, or can we lengthen some of the people that we are, or vendors that we are paying in a quick fashion, can we lengthen that out and start paying them a bit slower? And the cash savings from that, in this example here, it's $400 million. Over a year's time, I mean, that really can add up at a percentage rate. So it is a savings category to consider, and you can do a vendor analysis to figure out who to pay sooner and later.